All right, welcome back everybody to Altcoin Daily, where you subscribe for a video on the cryptocurrency market every day. My name's Austin, and in today's video, if you hold Bitcoin, if you are thinking about accumulating more Bitcoin, make sure you watch to the very end of today's video to get the most value. I have multiple charts to show you. You don't want to miss any of this, trust me, and make sure you like the video to get this information out to the most people. That being said, like always, let's jump in. What is this chart? This is a chart of the history of Bitcoin's price starting when Bitcoin consolidated way back at the beginning of 2015 when the Bitcoin price was around $200, and then our journey all the way from $200 to $20,000, and of course, where we are today. And what you'll notice as Bitcoin was 100xing over 3 years from $200 to $20,000, you'll notice two different types of boxes that I've highlighted here. First off, the green boxes. The green boxes represent every time in Bitcoin's 3 years from 2015 to 2018. The green boxes represent every time Bitcoin had a correction that was under 50%. It could be anything from a 32% correction, we have a 39%, 31%, 25%, 41%, but the green boxes represent corrections that were under 50% over the course of 3+ years for Bitcoin. Those are the green boxes. And then you'll notice the red boxes. The red boxes represent every time Bitcoin over 3 years, over 100xing, the red boxes represent every time Bitcoin corrected over 50%. What do you notice? Well, you'll notice that there is no red boxes. And yes, in Bitcoin's very short history, usually about every 4 years, that fourth year we have a parabolic move where Bitcoin explodes a little bit more than usual. And yes, we'll have, in this case, an 80% correction, an 80% correction, whatever that is. But I'm talking about after the big corrections where we wait a year. After that, at least in Bitcoin's history, Bitcoin has never had an over 50% correction in its lifespan, at least from a $200 Bitcoin to a $20,000 Bitcoin. We've had 30s and we've had 40s. And that brings us to today. If you're waiting to buy Bitcoin, this is that information you consider. And I'm going to be honest, this information, I want to give credit where credit is due. I got it from Richard Hart. I follow him on Twitter. He tweets, "Here guys, I circled all of the 50% dips Bitcoin had during the 100x from $200 to $20,000. You'll notice that there's no circles because there were no 50% dips. What do you think about this? I mean, it's not financial advice, but it's something to consider, especially when you put that into perspective of where we are now with Bitcoin. Because just like 2015, coming off of 2014, we had our bear year in the market. And you could argue that the fundamentals are better now than they ever were compared to 2014. But let's compare, because we did have a little parabolic rise up. We had some 20%, maybe even 30% corrections. But if we look at where we are now, let's see. Wow. Look at that. That puts us right at a 33% correction. Of course, now we're a little up coming off this bounce. But if history repeats itself, which obviously no guarantees that it would, and by the way, I'm not a financial advisor, just a crypto enthusiast, but if we were to correct, let's say we broke all odds and we went 50% down, that would take us to about $6,900. Now, we've made it very clear on this channel, just my opinion, that I do think that we have a little bit further down to correct, since yes, we did go through this parabolic rise. But my point is, I do think that we have a little bit further down to correct, but just historically, probably not that much farther down. We are most likely consolidating. I mean, we're still in this downward channel right now, but with the halving coming up and all these on-ramps, fiat, institutional on-ramps, this is the information that you take in. And yeah, this is just based on history. And if you're saying to yourself, hey, Austin, history's nice, but I need something a little bit more substantial than that. I mean, before on this channel, you showed me metrics that were a lot more interesting than history. I want to see more specific metrics. And yes, in the past, we have taken a look at on-chain analysts, Willy Woo's on-chain metrics, where we can see the network value that is actually happening on the Bitcoin blockchain. I have an update for you on this before I show you a new Willy Woo chart which speaks volumes. But before we do that, just a little bullish indicator coming off the NVT signal. You'll notice that every time this NVT signal, again, the network value happening on the blockchain, every time we passed this 70 mark, we entered overbought territory, and in the past, we've usually always seen a correction. Well, as of this last week, we have officially entered back under the overbought territory. Bullish sign indicating that we may not be about to experience as much of a correction as everybody thought. Very bullish sign. And me personally, I hold signals like this in way higher of a regard than historical analysis or signals. To me, this is a stronger indicator. To me, you use your own signals. And a last indicator I want to show you, and I guarantee that no other cryptocurrency channel has broken this news yet. This just got tweeted out by Willy Woo in under about 15 hours ago. This channel is the first to break it, and this might be the most bullish indicator that I've personally seen in the last, I want to say 6 months yet. You know what? Let me explain. You be the judge, but I think you're going to like this. Introducing the Bitcoin difficulty ribbon. When the ribbon compresses or flips negative, and we'll zoom in on this in a sec, but when this happens, these are the best times to buy in and get exposure to Bitcoin. Well, Austin, Willy Woo, how does this work? Well, the ribbon consists of simple moving averages on mining difficulty, so we can easily see the rate of change in difficulty. So this chart is indicating what the miners are doing, or the backbone of the Bitcoin network, the miners. And based on what the miners are doing, we can see, based on the on-chain metrics, historically what that has done to the price. This indicator speaks on the impact of mining on Bitcoin's price. As new coins are mined into existence, so this is how it works. As new coins are mined into existence, miners sell some of their mined coins to pay for production costs. Yes, we know this. And when those miners do sell, this produces bearish price pressure. But Austin, well, what's the difference between when these bands go wide and when they get really tight, which seems to be what we're coming out of right now? Well, when mining becomes too difficult, we know that it's the weaker miners, the smaller mining pools, that sell more of their coins to remain operational. Right? This makes sense because the larger mining pools, they have more in the bank, they can sustain longer. Those weaker miners don't have as much money, so they sell. And when mining becomes unsustainable, the weaker miners capitulate, and hashing power and network difficulty reduces, and that's when the ribbons compress, leaving only the strong, who sell less, leaving more room for more bullish price action. So what he's saying is that as the ribbons become more and more compressed, this represents what the miners are doing. And as these ribbons become more compressed, weaker miner pools, smaller miners, they're dropping off, which is unfortunate for them, but over time this represents less sell pressure from those bigger miners. Because again, they don't need to sell every day, every second. They have a larger pool. So as less sell pressure comes on, or you know what, just let me rephrase. We get more sell pressure as these bands tighten up from a mining perspective. So you'll notice every time the bands tighten up, the price goes down over time. Yet, as we expand, those are the times that we've had a bull market. Typically, we see this at the end of bear cycles. After miners capitulate, the lack of miner selling pressure allows the price to stabilize and then climb. The classic accumulation bottom. As a final note, notice how the 2019, where we are today, right here, and the 2012 bull market have the same structure. We saw a severe mining capitulation, the ribbon flipped negative, leading to a shorter accumulation band before the price breakout. This bull market has resembled 2012 more than 2016 structurally, at least from a hash power, network difficulty mining perspective. So let's zoom in. Final thoughts on this, and again, let me know what you think. Give me your takeaways down below in the comment section. I'd really be interested to just get your take. But if we look, check this out. We flipped negative. The Bitcoin difficulty ribbon is starting to open back up again. And historically, every time the difficulty ribbon opens back up again, that indicates less sell pressure from the miners. Bull market. And that's all I got. Guys, this was the video for today. If you like videos like this, if you appreciate videos like this, give it a like, get this information out to as many people as possible. And just to be very clear, in my opinion, I'm still, as we've talked about, I still expect more of a correction. But that being said, very easily we may not see these prices again ever, based on historical data and on-chain data from the NVT signal and the Bitcoin difficulty ribbon. So I'm buying now. Let me know down below what you're doing. And I'll see you tomorrow.